Morning, everyone. Welcome to our Phillip Securities Research morning call. For today, we have a few stock counter updates, including Apple's launch event last week, as well as IPO fact sheet, as a couple of Phillip on the ground, the usual technical analysis, as well as Singapore weekly, and also the FAANGM monthly for August. So without further ado, let me hand over time to Max to talk about Apple's event last week. Thanks.
Yeah, thanks, Jane, and good morning, everyone. Apple held its product launch event last week, so these are some of the highlights. Next slide, please. And yeah, as some of you may already know, the main highlight for the event was the new iPhone. The lineup is similar to last year, whereby they will have the iPhone 15, 15 Plus, which are the more basic model. Then they have the more premium models, which are the 15 Pro and Pro Max. So for the 15 and 15 Plus, the upgrades are mainly from acquiring the hardware specs from the last year's iPhone 14 Pro. So the iPhone 15 will be equipped with the A16 Bionic chip as well as the Dynamic Island, which was previously exclusive to only the 14 Pro and Pro Max models. Then the camera is also going to receive a huge update from 12 megapixel last year to 48 megapixel. In terms of the starting price, the starting price will not be changed. So it is the same as last year and will start at $799 US dollars. Then for the iPhone 15 Pro, this is where you can see Apple includes its latest technology. So it will be equipped with the new A17 Pro chip, which is 10% faster than an A16 Bionic. Then it also have a neural engine that's two times faster. So neural engine is used for machine learning tasks such as processing your speech to text, your facial recognition, and all of those stuff. Then for the starting price then for the camera, it is also equipped with a new technology that that allows it to have a stronger zooming power for the Pro Max. And in terms of the starting price, it is actually unchanged on a like-for-like basis, but we would like to note that for the 15 Pro Max, it now starts at 256 gigabyte instead of the 128 from last year. So it will experience a $100 increase for the starting price for the Pro Max only. Yeah, aside from for the iPhone, we think that the shipment for the first quarter of 2024 will going to be quite strong, mainly because we see that we are seeing the shipment time of the iPhone, if you order now, is going to extend to maybe in the middle of November. So this indicates a very strong demand, at least for the Pro models. Then just as a refresher for Apple, the financial year ends in the 30th September. So it's only about 2 weeks from now on. So yeah, we are expecting a revenue growth we could see a potential revenue growth for the first quarter of the next fiscal year. Then aside from the iPhone, they also launched the Apple Watch. So they also released the Series 9 and Ultra 2. Both of these products are equipped with the new S9 chip, which they call as SIP. And again, these are mainly providing the more performance boost compared to the Series 8. Then for the Apple Watch, they also introduced a new gesture control, which they call as double tap. So what you do is essentially pinching your index finger as well as your thumb finger to control the main button of an app, such as answering or ending your calls, play or pausing your music, or snoozing your alarms. Again, similar to the iPhone, the starting price for Apple Watch is also unchanged from last year. So overall, we think that even if there's a revenue growth for Apple, it is going to be driven by increase in volume, because yeah, we are not seeing any any significant increase in average selling price, unless if for some reason all of the consumers decided to opt for the Pro models instead. So yeah, those are the highlights for the Apple event. Now I'll move on to the ARM IPO. Yeah, we published an IPO fact sheet last week on ARM, so these are some of the highlights. So for the IPO details, ARM started listing on the Nasdaq on the 14th of September, and it is offering 95.5 million vendor shares, or about 10%, at $51 US dollars with a lockup period of 180 days. So yeah, the shares actually shed 25% on the first day of trading, but it was down by 4% on the following day, which closed at 60.75 US dollars. Just a brief background on ARM. ARM was established in 1990 as a joint venture to develop high efficient and high performance CPU. So it actually gained traction in the mobile phone market in the mid-1990s because its CPUs are very suitable for smartphones, given the smaller form factor of the devices. The company was actually listed on the London Stock Exchange as well as Nasdaq between 1998 and 2016, before it was taken private by SoftBank, which is still its main controlling shareholder. ARM has quite a huge customer base. So some of its key customers are your big tech companies like your Apple, Nvidia, AMD, and so on. In terms of the revenue model, we would like the most common misconception is that the ARM does not produce or sell any physical chips. So instead of selling these chips, they actually earn revenue by licensing as well as charging royalty fees. So customers of ARM like Apple and Nvidia and AMD will license the product design from ARM to design their own chips. So ARM is basically like a base for them to design their own products. Then after that, ARM will also earn a royalty fee for each chip that is produced or sold using its technology. So this will create a long-term recurring revenue. In fact, ARM said that about 50% of its FY23 revenue was earned from the royalty fee that came from its products released between 1990 and 2012. Yeah, next slide, please. Yeah, so looking briefly at the financials, FY23 revenue was actually down by 1%, or you can call it flat. And this is mainly because the smartphone market experienced a difficult year last year. So as I mentioned just now, so if you look at it by type, about 63% of the total revenue comes from royalty fee during the year. So if we take a look at the number of smartphones shipped during the period apologies, if you take the royalty fee earned during the period divided by the smartphone shipped during the period as well, we can estimate that ARM charges about $1.40 for each of the smartphone that is shipped around the world. So gross margin was at 96%, which is not surprising given the licensing business model. But however, operating margin was 25%, mainly because a lot of its operating expenses come from R&D because ARM needs to constantly improve its technology. Breaking it down by geography, you can see that US is the largest market and China is the second largest at 25%. So this significant exposure to China could pose uncertainties in terms of their growth trajectory moving forward, especially in the data center space. So yeah, because ARM is mainly present, ARM's largest market is the smartphone market. It is estimated that about 80% of the total revenue comes from the mobile market. Yeah, so moving on to the growth areas, these are provided by the company in their IPO prospectus. So just as a refresher, ARM holds more than 99% market share in the mobile market, and they're expecting the mobile market to grow by about 6.4% CAGR until the CY 2025, mainly because of the increasing 5G deployment as well as the AI and machine learning applications. Then on the cloud computing side, the company said that they hold about 10% market share, and they expect this market to be the fastest growing one for them, growing by about 17% until CY 2025, mainly because more companies are migrating to the cloud and more cloud service providers are deploying more ARM products. Then on the automotive side, again, they are also expecting about 60% CAGR, driven by more software-enabled vehicles that enable features like your ADAS or your advanced driver's assistance systems. Yeah, so lastly, on the on the valuation side, ARM shares was offered by $51, sorry, which signifies a 105 times PE as of the latest financial year. So this is actually quite a significant premium compared to its other mobile processor peers, such as your Qualcomm and Broadcom. So yeah, that's all for me. I hand over the time to John to run through FAANGM monthly. Thank you.
Thanks, Max. And good morning, everyone. So we'll just be running through our usual FAANGM for the month of August. Next slide, please. Okay, so for August, the FAANGM actually lagged the S&P 500 and NASDAQ for the third straight month, so it was down about 1.8%. Actually, quite in line with the S&P 500 and slightly worse than the NASDAQ. Amongst the 6 companies, Amazon was the biggest gainer after they issued better than expected earnings at the beginning of August. While Meta was actually the biggest laggard, down 7%, and we think this is likely due to some profit taking after a huge run up of about 4 times since its lows in November 2023. Obviously, the biggest drag for the 6 companies was probably Apple, that was down 5% after issuing its earnings and mentioning that there's still soft consumer demand for its tech hardware persisting. This kind of dragged down the overall FAANGM, mainly because it's the largest cap stock in these group of companies. Next slide, please. We'll move on into the individual, I guess some updates for the individual counters. For Meta, it was all about AI. So they launched a couple of products, AI related products. The first one was called a Seamless M40, and so that's a kind of speech to text and text to speech and text to text kind of model, which can be done in about 100 different languages. So, for example, you can speak in English and then ask it to transcribe in the Chinese or Mandarin or some other language, and it can do that across a variety of platforms. The second is that it actually launched an AI tool to create music from text. And this product is called AudioCraft. So I think it's quite interesting that Meta is focusing a lot on AI and trying to deliver a lot of, I guess, upgrades and new products. But the main concern we have is we struggle to see how these kind of products can be monetized for future use. We think what's most likely going to happen is that these are just going to be, I guess, add-ons to its main products rather than standalone products on its own. Moving on to my next counter, which is Netflix. So I mentioned a couple of months ago that there was a writer's strike. So this writer's strike is actually still ongoing, and there's really no end in sight right now. But what's good is that major studios are actually ready to discuss some of the safety nets surrounding AI and how they might be taking jobs from writers and actors. But the big point about revenue sharing demands for streaming and all that are still kind of up in the air, and studios are not quite ready to kind of meet this demand right now. So that's kind of the biggest reason why these tracks have been dragging on for, I think, about 3 months right now. In terms of streaming grew and continues to reach an all-time high in terms of its market share in US TV time. So it's obviously outperforming broadcast and cable TV. For Netflix, in terms of the writer's strike, we think that Netflix is I guess the most insulated from it because they have about half of its original content production outside of the US and even more outside of Hollywood, because these strikes are predominantly in Hollywood. Whereas if you compare some of its counterparts like Disney and Warner, most of their productions are actually being severely impacted by these strikes right now. So obviously the negative impact for everyone would be a delay in content being pushed out, but we think this would obviously impact more so Netflix's competitors rather than themselves. Moving on to Alphabet, like Meta, Alpha is actually working on some sort of AI product, even though it's a little bit different. They're working with Universal Music on a licensing deal to mainly targeted at AI generated songs, because right now there's quite an influx of these AI generated songs that are using a lot of the voice and sounds of existing artists while not really paying any copyright dues or anything like that. So this is kind of what they're targeting. They're targeting to create a tool that would allow creators to create more deepfake tracks, as they call it, while also paying appropriately, I guess. But the main thing for them is that they're actually continuing to consolidate a lot of their office spaces. So they're listed about 182,000 square feet of office space in Palo Alto. This is adding to an already 1.4 million square footage of office spaces they offloaded in May. So they're continuing to optimize some of their workspaces, especially as a lot of their employees still remain in a hybrid workforce environment. As of right now, Google still has about 31 million square footage of office space in the San Francisco Bay Area. So there's still a lot of office space, and we could see continued consolidation moving forward. In terms of expenses, office facilities, including data centers, made up about 12% of its operating expenses. So it's quite a significant chunk of expenses, and we should expect this to kind of come down. So that's all for my counters. I'll hand it back to Max to carry on for Apple and Amazon. Thank
you. Thanks, John. So for Apple, there was not much news for August, aside from the fact that they sent out the invite for the launch event on September, where they released their iPhone 15 that I covered just now. And yeah, apparently the rumors about the iPhone 15 were apparently quite true. So yeah, nothing much about Apple during the month of August. Then so I'll just jump straight into Amazon. So for Amazon, the first news is that they cut dozens of house brands. So the company has decided to eliminate 27 of its 30 clothing brands, as well as some other private label furniture brands too. So with part of the reason for doing this is because of the criticism that they have received from regulators, saying that these in-house brands could potentially cause a conflict of interest for Amazon between selling its own products or selling those from the third-party resellers. So because of this, they are also doing this for pleasing the regulators too. Then the second news is that Amazon has restarted its shipping unit called Amazon Shipping, and as the name suggests, it handles packages for products sold on its own website, as well as those from other websites too. So this service will compete directly with your shipping companies like FedEx and UPS. And apparently, this Amazon Shipping was actually established before, but it was paused during the COVID times because Amazon couldn't fulfill its own demand, so they also couldn't afford to provide this service to other companies as well. So yeah, since right now the online shopping has already normalized, Amazon thinks it's the right time to do so. So in terms of our thoughts on it, we actually like the move for Amazon to cut its house brands, and because again, aside from pleasing the regulators, we think that it is also done as a move to increase its operating efficiency, because it is kind of similar to what the company did a few months back, where they closed down some of its devices units that were unprofitable. So yeah, that's all for my counters. Now I hand over back to John to run through Microsoft and sum it up. Thank you.
Thanks, Max. So I'll present on behalf of Ambrish for Microsoft. So nothing much from Microsoft actually. They're just trying to work through their takeover deal of Activision Blizzard. The main stumbling block has been a lot of regulators in the EU saying that this is monopolistic and so on. So they've actually been working with regulators to try and appease them and the biggest move here is that they're actually divesting some of their streaming rights of Activision to Ubisoft, which is one of the biggest competitors to Activision. So they're trying to make it seem as though it's not, I guess, that monopolistic in nature. But this has caused the takeover to drag for quite a while. I think it's almost been 2 years since they mentioned that they're going to be taking over, and up to now they haven't really done so because there's been so much pushback. But we think that it's this deal is kind of coming to the end of, or rather, it's coming to the end of regulators pushing back, and so we should be able to see this deal kind of move forward. Hopefully by the end of the year, but definitely early into 2024. Moving on to the next slide, which is just a conclusion. We still remain overweight on FAANGM. We still think that, or what we're actually seeing is that AI actually is continuing to drive a lot of the product innovation. So it's actually driving a lot of customer interest by corporates for cloud and digital advertising services. Because AI has basically improved a lot of these services. But we still think that there is some weakness in demand for tech hardware, which it's I guess a little bit more apparent with Apple as well as Microsoft. So that I'll conclude the FAANGM for the month of August. I'll hand it over to Darren. Thank you.
Yeah, thanks, John. Yeah, so we met with Takara Corp, the management of Takara Corporation. So this is Phillip on the ground. Yeah, so just some highlights. This is not a rated counter. So it's last traded share price of 58 cents and it has a market cap of just 74 million. So Takara Corporation is a real estate they do a real estate investment in Australia, Japan, and Singapore. And they also manage brands and market them as well in the beauty, fragrance, and lifestyle categories in China, Southeast Asia, and India, but mostly in China. So for their first half results, you can see the growth was driven mainly by the lifestyle segment, as the investment business, most of it is joint venture and associates, so it's not booked on the top line. So you can see over 90% is from the lifestyle business for the revenue. However, the share of associates and joint ventures, there was a turnaround from a loss, or rather a loss from a share of JV and associates in the first half of 22 to a 10 million gain, profit rather. So that is because of the turnaround in the Gem Life. So Gem Life is actually it's an over 50-year-old resort, a luxury resort living in Australia. So it is like a retirement, not say a retirement home, but it's like a luxury retirement resort per se. So the concept is that these retirees, or rather over 50-year-olds, they will downsize to this Gem Life. Because this Gem Life, the properties are usually valued around 600,000 to about 800,000. And then so they'll sell their current property, which is maybe about $1 million, and then they'll pay in full for these properties in Gem Life. And then right now for Thakral, they have about 1,200, they have 1,200 occupied homes as of 30th June. And they target about 7,000 homes in the next decade. And in the near term, they target about 300 to 400 every year expansion in this for more occupied homes. And then the good thing about this is that this is a fully integrated value chain. As you can see at the bottom right chart, so that is a business model. So at first, they'll acquire the sites for the Gem Life, and then they'll sell and market the houses. So they'll sell it at about 600K, and it's all on cash terms. Out of these homes that they sold so far, none of it is on any loan, so it's all cash. And then they build the homes, and then they'll kind of lease, the residents will own the houses, and then they'll kind of lease out the land. So Takara will get about $200 in site fees every week. Yeah, so that is the business model. So it's a full chain, like they earn the development profits because they also do the development, the construction, and then after that, after the houses are complete, they will earn the recurring income from the site fees. Yeah, so this is a fully integrated value chain. And then they have another portion of the investment business, which is investment in real estate. So the biggest one is in Japan, with a focus of commercial properties. So most recently, they managed to divest an Osaka hotel at 32% above valuations. So that's a good thing as well. And for their other commercial properties, it booked about 5 to 10% rental reversions for the Japan office. And then they also have plans to do capital recycling for these Japan properties. So they have listed 2 of their office buildings for sale. And then for the lifestyle business, they basically do, there are 2 segments. One of it is management of the leading beauty, fragrance, and lifestyle brands. So these are the 2 main ones, Sephora and Ralph Lauren, as well as they are also the exclusive distributor to DJI, which is one of the world's largest drone manufacturers. They have about 70% market share. So they have exclusive distribution rights in 7 countries across South Asia. So the growth going forward for Thakral is the Gem Life, as in scale up this Gem Life, their business, as well as their lifestyle business, where they plan to open new stores in their management of the brands, as well as the distribution rights of these drones. And right now, Thakral is trading at about 7% dividend yield. Yeah, so the next slide shows some pictures of life in Gem Life. Like you see, it's like a resort, and there's a pool, and then you can go snorkeling, diving, etc. Then there's also a very nice library, and yeah, the backyard. So, and then the bottom two pictures on the center and the right are the management of the brands of Sephora in Shanghai and Ralph Lauren. Yeah, so that's all from me. I hand over time to Peggy. Thank you.
Thank you, Darren. We talk about Hong Leong Asia today. We visited the ICPH, it stands for Integrated Construction and Prefab Hub in Singapore. Okay, Hong Leong Asia is one of the 5 successful awardees for the ICPH. The first ICPH was awarded in February 13, but Hong Leong Asia was awarded in 2018. It's only TOP at the end of last year, 2022. So it took quite a long construction period. The ICPH, what does it do? They produce prefab, pre-finished volumetric construction elements. This is for construction projects. This is like can think about like a Lego blocks where they bring the construction offsite to this ICPH, construct all the parts and assemble and bring it to the site and stack it on. So it's like stacking on Lego blocks. So this is a part of a, okay, sorry for the long names of that, but this is all designed by BCA. A part of DFMA, Design for Manufacturing and Assembly Technologies, which is the BCA is pushing to bring 100% of the construction offsite. That means the construction sites will have little activities, less noise. Only the final assembly work is done there. The other big bulk projects are done offsite. And in the past, there are precast factories, like you see a lot in Johor and Tuas. Quite a number of them have reached the end of their lease terms. These precast factories are the ones that also do these precast Lego blocks. But yeah, but they have moved from in the initial years is only building like your bathroom, your toilets modules. Now they actually ICPH has gone into the bigger scale, like the wall, the floor, slab, and so on. So out of these 5 awarded ICPH, you can notice from the operators that the 4 operators out of the 4 operators are actually construction companies. So construction companies are actually bringing their construction work on site to off-site. But Hong Leong ICPH, Hong Leong, as we all know, is a building material suppliers. So it's the kind of stand out from the rest. Actually, you can think about it, they are actually going into the space where the customers are going into, because all the other operators of ICPH will probably have to buy RMC and cement from somebody if they don't have an import license. So they will have bought from PenU or Hong Leong Asia. So now Hong Leong Asia is actually going to the space to produce some of the products. Okay, that's for that. So this ICPH that Hong Leong has is actually more than 2 times larger than the size of the next largest. Is able to produce 100,000 cubic meters of precast concrete elements. That's equivalent to 2,500 BTO flats. If you think about it, the HDB has undertaken to construct between 20 to 23,000 flats a year now till 2025. So that's about like 10% of the volume of BTO flats in Singapore. This is a 51% joint venture, 55% owned joint venture with Sunway. We estimate the cost, they wouldn't tell us, but we estimate it's about nearer to about 200 million. So Hong Leong's share is about 100 million. And this structure has a 30-year lease, sits on a 30-year lease. The the demand for this kind of products, PPVC products, is actually driven by BCA's change in regulation. Note that PVC is actually can be of two types. One is a concrete, or you can use steel. Okay, for residential projects or even hotels where there's people living inside there, then so you worry about water seepage, right? The steel is not an ideal solution because of the rust in it. Then if the steel rust, then it will show up on your wall, and then discoloration, and then you walk to your MP to complain, and then this create a lot of problem, especially if it's a HDB flat. So therefore, the concrete is used more widely used for PPVC, and is classified as one of the DFMA technology, which BCA approved. So the BCA guideline is that for all private and public residential non-landed properties, minimum 60% must be PPVC for anything 5 stories and above. I mean, anything below 5 stories and below will have to be at least 50%. And after COVID struck, when all the borders are closed, they found that they couldn't get PPVC from Johor. So they step up with another requirement that out of the PPVC requirement, 50% must be sourced locally in Singapore. So note that the Singapore's PVC is 20% more costly than Johor, and even if you consider all the freight costs, so that has actually increased the construction cost for most developers. So we for this project, the impact on Hong Leong Asia is in terms of depreciation. So over a 30-year lease, 200 million over 30 years, there's about 6-7 million in depreciation per year, and then Hong Leong share is half of that. Then there's an interest cost in holding these assets. Because they also, from selling RMC and cement, they now go further downstream to also produce the modular elements, and then wait for customers to come and take delivery. So there's also a higher working capital that will kick in from this year. So we think Hong Leong's strategy is probably to want to defend their market share for ready-mix concrete and cement, and also potentially they might see further tightening on requirements by BCA to impose more use of PVC elements in construction. So suffice to say, all this will push up construction costs. So I don't see any likelihood of any easing of property prices if your the contractors have to bear higher materials costs. Okay, I go on to the next slide to show you some. Yeah, thanks. Okay, Hong Leong Asia, besides, although building materials is the big bulk of their business in Singapore and Malaysia, China Yuchai, which they own effective 44%, is the big component of their net profit. In the first half, China Yuchai contributed 37% of Hong Leong Asia's net profit, and China Yuchai is one of the 3 biggest diesel engine producers in the world. The other 2 is Weichai and Chumings, and all 3 has done, especially for the 2 big players, they have done very well in the first half of this year, along with Sinotruk. Sinotruk buys their engine from Weichai, and all this is also due to the change in emission policy to meet higher standards in China, and also the replacement cycle after the lockdown in COVID. Yeah, so yeah, this is for just for your consideration. I'll move on to the next counter. Thomson Medical. Okay, we visited them after the results were released. Their year end is end of June. The market cap is 1.5 billion. This is of course very the biggest shareholder is Peter Lim. His son Lim Kiat is the co-chairman. Besides the Thomson hospitals, the O&G hospitals in Singapore, they also run diagnostic imaging centers and family clinics in Singapore. Also, you can see them in Novena and Parkway. Yeah, and then they also hold this Thomson Medical holds a 70% stake in TMC Life Science Berhad. This is listed on Bursa. This TMC Life Science has just recently got the approval to increase the number of license plates for license beds from 350 to 535 from this year. And more strategically, Thomson Medical owns a 9.2 hectares of freehold waterfront land in Iskandar and GB City Centre. And this is precisely this piece of land that's been sitting on his kind of balance sheet and weighing down his balance sheet and cause an interest cost. But any redevelopment of this land bank will change the entire capital structure of Thomson, capital and profit structure. Okay, and Thomson has also recently announced the acquisition of a Vietnam hospital for $360 million, which I think that they probably need approval from shareholders. The second half, the full year numbers show not illustrative of the situation or healthcare situation in Singapore. We decided to pull out the second half numbers because COVID-related work has tapered off in the January this year, January to June this year, and all the transit care center has mostly scaled down. Vaccination center has also been scaled down. TMG only have one left, which will expire by the end of this year. And these centers are being paid. When they operate this, they are being paid by the Singapore government. Also, in this year, there is more obvious impact from higher staff costs and higher operating costs, and interest costs, of course, has increased. Okay, key takeaways from the meetings is we saw very strong healthcare demand in Malaysia. I'll show you some charts later on for this. And with the RTS, the railway between Johor and Singapore, there's already it's back on the table for discussion. And the possibility of an economic zone for economic development zone for Johor, for Singapore in Johor. So they're looking to revive the Iskandar project, maybe build a medical facility in Iskandar. Currently, they are waiting for fire safety approval from the Malaysia Authority, and they say MOH approval. So I believe this is to seek approval for the use of MediSave in the Iskandar hospital. Currently, IHH hospital in Johor is already approved for MediSave is approved for drawn down, and I'm not sure about HMI, but so there's a chance that they could also get the approval for that. So on the Singapore's and along with this, they also will be constructing a healthcare hub in the Iskandar and Johor city center area. So the 9.2 hectares of freehold land, some part of it could be redevelopment projects could start. Development projects could start again. In the Singapore hospitals, they are adding 1/3 capacity by reconfiguring the areas, and they are already moving extend beyond O&G to other specialties, and so not just focusing on women and children. And importantly, they are also adding ambulatory care centers. This is because the traditional thing is if you need a surgery, you get into the ICU ward. But actually, most people don't need to stay in the ICU. Once the surgery done, they could move on to a step-down care center. And this ambulatory care center is such an example, which will free up the space for the hospitals and for the hospital, and allow more patients to a lower bill for the patient. So in the Malaysia hospital in Damansara, they also have been approved to increase the beds to 535 million, and they have 535 beds. They have a very strong fertility center, and IVF services credential in the Malaysia hospital. So quite a number of plans are in place for the Thomson Medical. The only thing that's probably investors are looking is at the net gearing of 0.8 times and how they're going to resolve that. So they in July they had already raised 150 million bond at 5.5% interest rate to part finance the Vietnam hospital if the acquisition goes through. And more recently they announced their loss of free float. So we guess, right, that we think that placement of new shares could not be ruled out. Could not be ruled out. Okay. Then in Singapore, there's something that's it changes in the pipeline for the healthcare sector is the Healthier SG initiative. This initiative as to exactly how it will pan out for all the healthcare players is not so clear. But it's from the look at it, it seems to favor the bigger players. So the standalone clinics or just a small handful of clinics, number of clinics, will not be able to achieve economies of scale like the bigger players. And we think for Thomson, the big catalyst will be the Malaysia. If Medisave can be applied, you will attract the Singapore patients over. And if the insurance company would take a change in the stance to accept treatment beyond the Singapore shore to other regions. Yeah. I show you some slides to illustrate some of the points here. Okay, just to preempt questions, so I just show a comps table for the three listed tertiary care providers in Singapore. So Thomson obviously is like trading on the higher side. But then because the other two comps are based on FY22 full year's earnings, and 22 was they still had some COVID related activities, so that might not be very fair for Thomson, but still is the best we can do at the moment. Yeah. The next slides are some charts on their numbers in Singapore and Malaysia. And in Singapore, FY22 versus 21, there was a spike in outpatient and also an increase in inpatient. But FY23, the numbers has fallen in line with the easing of COVID related activity related illnesses. But in Malaysia, strangely, if you look across to the right, Malaysia, the inpatient continued to surge by 20. It was up 23% in FY22, but FY23 it increased further by 27%. And besides the domestic, very strong domestic healthcare demand, there's also a gradual increase in foreign patients. For the average bill size, of course, Singapore is really expensive. The Malaysia bill size for inpatient is right about just slightly more than half of Singapore. In terms of bill size, it's not shown here, but our bill size is just gone up by 13% in FY23 for inpatient, and outpatient 7%. But Malaysia, the bill size is also recent, but for outpatient has increased by 26%. Yeah, that's all for me for Thomson. Hand over to Zane.
Thanks, Peggy. Move on to the technicals. Okay, so for S&P 500 last week, we've found a lower swing high over here upon the retest of this downtrend resistance line. So it looks like we are still in a bit of a consolidation taking place in this wedge over here. So for this week, we could potentially see resistance from 4490 onwards to about 4530, this area, while the support could be around the lower end would be 4380, while the trendline support could be around 4430. which is also near the recent swing lows over here. Yeah. So in terms of individual companies, the first one will be TSM. So for this is a technical sell at $89.64. The take profit levels at $82.73.50 with a stop loss at $93.50. The stop loss goes at $89.25 on Friday. So for TSM, it has been rather weak. From the chart, you can see that there was a breakdown of this uptrend channel support recently, following a downtrend which started in June this year. And also to add on to the signs of weakness was that there was a breakdown of this previous support, turn resistance at $96, and then price continued to slide down from there. So potentially price could, if the downtrend continues, could potentially go on to test the swing low at $82 first, then followed by near $73 over here. Okay, next one will be Olam. So for Olam, the downtrend is still quite strong. So it has been trading in this downtrend channel over here, but it has slipped out of it towards the end of last week. So that also in terms of the momentum wise of MACD, also can see lower highs and lower lows being formed as well. So in terms of Olam now, there's still no signs that it has started to find some support yet in this downtrend. Yeah. Then the next one will be Alibaba. So for this, the technical sell at $80.71, the take profit level at $80.50, the stop loss can be placed at $92. Stop loss goes at $87.07 on Friday. So for Alibaba, it's also bearish because there's a breakdown of this bearish flag support over here recently. And also similar to DSM, there's upon the retest of the previous support at $94.50 over here, it turned into resistance over here. So and then the price went down from there. And to add on, when you look at the longer term trend, at the bounce of the key support at this $80 mark, we have been forming a lower swing high over here from the swing high over here. So that indicates some weakness in the long run as well. Yeah, so potentially price could go on to test this support level at $80 again. Then in terms of the buys would be first one would be JP Morgan. So for this price found some support at the rising wedge support over here at $146, and also broke out above this short-term downtrend resistance line recently, coupled with a fresh positive crossover like MACD as well. So potentially price could go on to $154 first, which was like a range support breakdown took place recently. That could add some short-term resistance. Then followed by $162, which was a previous swing high over here last time. And last but not least will be Micron. So for this is also a technical buy. Price as for this technical buy $71.79. Take profit levels at $80.84. Stop loss at $68 with the last closing price at $69.88. So for Micron, price has broken out of a consolidation wedge, shown in the chart, following a build up in the resistance area around the $69.50 mark. So with that, if it's supported upon the retest over here, price could potentially extend its recent momentum. Potentially could go and hit the $80 horizontal level over here previously, and then followed by $84, which was like a swing high over here. Yep, so that's all from me. I'll pass on my time to Paul to talk about the Singapore Whaling. Thanks.
Yeah, thanks, Zin. Next slide. Okay. So we just go through the usual macro. Most of the macros. So let me just change Wi-Fi. Most of the macro has been pretty weak in Singapore. If you look at the employment numbers, we only added around close to 27,000. This is a slowdown and the slowest in 7 quarters. The one thing good is that the vacancies is down, but there's still labor slack. So labor slack is a term which Jerome Powell likes to use, which is the number of vacancies compared to unemployed. So Singapore is still 1.9, so it means that there are 2 jobs for every 1 person looking. Of course, it doesn't show the quality of the jobs, but it just shows there's a lot of vacancies. compared to pre-pandemic, which is 0.85. Residential units was also down, but as we all know, it all depends on what are the new launches. But when you look at the third quarter so far, July and August, the number of home sales is up actually 42% year-on-year. So we're bouncing back very strongly in terms of property sales. SIA continues to record strong passenger numbers, up about 31% in August, in line with the prior month, July 32. We had a slew of Chinese data coming out. For me, it was mixed. I think the positive one was retail sales. It was incrementally better at 4.6. Why I'm a bit more cautious that because consumer retail sales in China is a bit hard to gauge because it's very volatile because it depends on last year reopening and closing and so forth. But at least it's a better number than the prior month. But the investments continue to be weak. So fixed asset investments is one critical indicator, as we've seen, because China their model has always been investments, but that continues to slow. So it's a year-to-date number, but it's slowing down from 3.4 to 3.2. Property is still weak. Property is still down like 25% year-on-year. Annualized is 9 million, sorry. Annualized about 10 million square meters. We'll discuss more about it later. In terms of some US data, of course, the most important one was CPI. So there was no shocking number. It was more or less in line with expectations. So it also means that we expect the upcoming Fed meeting to be unchanged. The one that's holding up inflation, because inflation, you got energy, goods, and so forth. But the one that continues to hold up inflation in the US at least is shelter, which is rent inflation. It's up 7%, the strongest category. Although it's slower, it's one of the slowest month-on-month in 2 years. So this is encouraging that that could also start to pivot or at least turn down sharper in the coming months. Retail sales in the US, although that's not picked up in the media, but it continues to be weak for us. I think retail sales in the US is still very weak. It's only like 2%. Compared to pre-pandemic, the trend growth was about 4%. Next slide. Okay, so in terms of tactical view, I think the most important event for this week will be on Wednesday when the Federal Reserve makes a decision. I think our view is aligned with where the futures market is pricing, which is no change in the interest rates for this coming meeting. As usual, the Jerome Powell will sound hawkish, that he still want to fight inflation. He will still leave the door for more rate hikes, data dependent. I'm not sure what that actually means because everybody is always data dependent. I'm not sure when he's not, but so for us, most important now is the shelter inflation, where the trend is, because that is the part that's about, I think, 30% of the CPI or even 40% for core. But what we see is that the market rents, that means you take market data, not the CPI that the Fed released, but that the Census Bureau released, but if you take just market rents, like Zillow and all those spot market, rents already peaked. At least the growth rate has already peaked in early 2022. So we think that interest rate inflation has also peaked and it will start to come off, at least core inflation, because of the weakness in shelter. Of course, the headline inflation, because of I think all prices have bounced almost 30% from June. So I think the headline inflation will be up, but at least the core, which is what the Federal Reserve looks at, will be coming down. So in terms of some of the Chinese macro that come out, so it's largely soft, I think, in general. Retail sales, property sales is down, but for us, because since everyone is focused on property sales, Chinese property sales, so when we look at the data, in terms of new home sales, it peaked about 15 million new home sales in China in June. It is now trending around 9 million homes. So currently, it's about 9 million homes sold per year. It's already down 40%. But we think it has probably not hit bottom. This is our own guess. Everyone has their own guess. Some market is expecting 10 million homes per year. We think it's more like 7, because what we did was we took at the number of marriages, and then we took at the number of new household formations in China. And then we took what's a historical pattern, then we get like almost only 7 million homes should be sold in China. So now it's still 9 million. So we think the property market could still come off quite sharply. Again, this is like our own back of envelope guesswork. So in terms of the key events for coming up will be the Fed rate on Wednesday. Then this week we will have 2 webinars. Tomorrow is Pop Next, and then on Wednesday we will have Comfort Delgro. We'll also have our strategy and stock picks as well. I forgot to put here, but it should be on the 7th of October. Next slide. Okay, so this is just to show how's the labor conditions because the data just came out. This is up to June. So employment in Singapore continues to slow down. You can see the peak in 83,000 a quarter. It continues to trend down. Hopefully it doesn't go negative, but at least it continues to trend down. But strangely, the vacancies are still high. So if you look at the vacancies, even for PMAT, professional managerial, it's still higher than the 2019 levels. Likewise for labor slack, but again, the number of jobs continue to drop. So I'm not sure why it doesn't coincide. But anyway, the basic conclusion is that employment is slowing down in Singapore. Next slide. Okay, the chart on the left is very noisy. It's all kinds of because we measure all the components of the inflation in the US. But the one that is the highest right now is the black line. You can see at the far right here. Most are sliding down, but the one that's holding back up is shelter, which is around 7%. The one bouncing up is energy because oil prices have to climb back up, or at least gasoline. But if you look on the right, you can see that the shelter, which is the red line, and the market rent, so this is a market rent index in blue, it has already turned down, at least the growth rate. It doesn't mean it's dropping, but it's just that the growth rate is slowing since March 2022. And shelter inflation peaked in March 2023. So there's like a one-man leg. So anyway, in conclusion, what it means is that inflation should continue to trend downwards. So you should so most likely we think interest rates has already peaked. So that's why we spend so much time on inflation, because it will give us some sense of where interest rates will be. Next slide. So for the next slide, China macro largely soft. So if you look at property sales, it's already down 40. Sorry, it's not August 23. Actually, it's annualized, it's down 40. For August, it's down about 20%. But what we think is that the red line, at least, is a measure of the number of homes sold per year. It's about 15 million at the peak. Now it's trending at 9. Our own guess, it probably might bottom out at 7. Then for retail sales, it's so hard to, because it's bouncing up and down because of pandemic. So I'm not sure why the media says it's positive. I mean, it's better, but it's very hard to read such a volatile number. Next slide. Then, okay, this is for interest rates. If you want to know what the market is expecting for interest rates, this is the chart. So right now it's 5.3. So the market by September, which is the 5.4. So you can read the data in the middle. So the market is expecting only 2 basis point hike, which is then 10 basis. So maybe there's still some estimates that there could be a hike in November, but the market is expecting 100 basis points cut in 2024. Next slide. Oh, sorry, the audio is bad. Oh, okay, not sure my internet. Next slide. Yeah. Okay, Jen, one last time, sorry for the audio. Speaking as last I can. So the last one is on there have been some electronics expectations that because the venture share price rebound and so forth. So when we look at the data, at least the 3 large contract manufacturers in Taiwan, UCI, Honhai, and Winstron, one thing good about them is that they give monthly sales data. So if you look at the monthly sales, it continues to be weak. So what it just tells us is that third quarter results should still be weak for the contract manufacturers. Maybe not for Aztec, but at least the rest will be weak. Because if you look at the 3 big guys like Honhai, Winstron, depending on the product, but we do see some rebound in semiconductor sales, maybe in part because memory could be recovering as what the chart shown by Zane earlier. Okay, I think that's my last slide. Thanks.
Thanks, Paul. I think I'll start to take some of the Q&As. There's a question here there are 2 questions here on ARM. ARM, can you keep it for the long term? And what is the fair value price to buy ARM holding shares? So first of all, I guess we have the caveat that we don't actually cover ARM, and it's a little bit difficult to figure out what is a fair value price. First of all, because they just listed, they've been private for the last few years, so there's very limited, I guess, public knowledge that we get. In terms of their growth rates, Well, first of all, right now they're trading 100 times trailing 12 months PE, which is quite a lot. But when you look at where the growth is going to come from, currently most of their revenue is stuck in mobile phones, which doesn't seem to be increasing that much. If you look at just the CPU side, or rather just the personal computer side, this market is pretty much dominated by AMD and Intel in terms of chip design and architecture. So right now, where they're really looking for growth is in the cloud space, and I guess in some sense they're really pinning, or investors that price in current valuations are just banking on ARM kind of tagging onto Nvidia, because the biggest area for growth right now that they can see is Nvidia is starting to build out because they already have the GPUs for data centers. So right now they're starting to build out the CPUs for data centers. The biggest reason why they would do this and why people will buy Nvidia CPUs instead of your normal Intel and AMD. It's largely because they probably work a little bit better in tandem with the Nvidia GPUs, and I guess higher performance compared to those that are used in just your PCs. So all the growth expectations is actually just coming from Nvidia using ARM's chip design in the CPUs that are for data centers. Yeah, I'm sorry if it's a bit complicated, but so essentially at 100 times PE, if you think about it, ARM has to triple their earnings for this year for them to be priced at about 30 times forward PE. Whether or not they can triple their earnings remains to be seen. I think if you think about it, giving them a very healthy boost of doubling their earnings for this year, just a very basic estimate, their PE earnings would be 50 times. I think something that'd be a bit more fair value would be somewhere in your 35 times range, which essentially will put the price, I guess, somewhere closer to $35 to $40. But that's just off a very, very generic estimates. Like I said, we don't really have that much information on ARM, so a lot of it will have to be a wait and see. How is it really going to? Will the revenue really grow that much, and will the earnings really grow that much? Because they do spend a lot of money. Most of their margins are actually spent on R&D. So yeah, it's with respect to can you keep it for the long term? I think definitely it looks like a good company. If you want some exposure to the semiconductor space, you don't want to put your money with NVIDIA or AMD and stuff like that. ARM is definitely something that is riding on a lot of tailwinds for the foreseeable future. We just, in terms of valuation, we're not sure whether right now it's fair value. I hope that helps to answer your questions. Thank you.
Yeah, I think I'll take over the Q&A. There's some questions for me. This question, Peggy, between Hong Leong Asia and Pan United, which one you prefer? Pan United stands out for its higher ROE of 11% for FY22. This year, my projected ROE is about 16%. And there's even with net cash in the balance sheet. For Hong Leong's ROE, it's about 6% last year, so much lower. And ROE compared to almost like half of Pan United. And Holdings Asia's net cash, it's actually most of the cash is actually all the cash is rests with China Yuchai. They consolidated China Yuchai in the books. China Yuchai has a net cash about 411 million Sing dollar. So if you take off that, the Holdings Asia is actually in a net debt of 264 million Sing dollars, and that probably explains why at the ICPH briefing meeting, like 2/3 of the of the people there were bankers. Yeah, so for that, Japan United is a better bet, and it delivers a dividend yield of 5.1%, which is in line with because the major shareholders are also hold a very big stake in the company. I hope I've answered that question. Okay, the next one is, hi Peggy, between Holdings Asia and BRC Asia, which would you prefer and why? Thanks. BRC Asia definitely, because it's the dominant market player in the reinforced steel for buildings, and this segment they have a fluctuation clause whereby they can pass on any increase or any in the prices if it's a public sector contract. So in terms of margins and in terms of collectability of the receivables, the risk is much lower. Hey, Holdings Asia, about 37% of their net profit comes from China Yuchai, because the truck sector and then relating to it, the engine suppliers would also probably be is probably going to be a fairly good year this year for them. But if you like this sector, you can always buy directly into China Yuchai or Weichai Power. You do need to gain an access through Holdings Asia, and furthermore, Yuchai is a direct play with a stronger balance sheet. So BRC definitely, yeah. Thank you. Hi Peggy, just to confirm I heard you correctly, Singaporeans also who seek consultation treatment in Malaysia's hospital under IHH management is eligible to claim Medisave for the bill. Thanks. Yeah, I called up IHH to check. They said yes, yeah, but I haven't tested out because I haven't forced it so far. Yeah, but I suspect, and also I don't know the technicalities. I suspect it could be you get to get a admission or you somehow in Singapore hospital over here first, and then get redirected to Malaysia. But in any case, you pay your bills, whatever you incur in Malaysia, you can, it's deductible to the Medisave. So there might be some linkages with the Singapore setup as well, which explains why I think, this is my personal opinion, I'm not too sure, that having a Singapore presence helps to maneuver around this Medisave issue. Yeah, so probably not everyone can qualify for that. Thanks. Hi Peggy, thanks for the great overview of TMC. What are your views of TMC versus Parkway Life? We can request Zane to can you flash back to the table comparing the three hospitals, the valuation? Thanks Zane. Yeah, the hospitals are, thanks very much. Yeah, obviously trading at very high multiples in terms of price to book or price to PE or even EV/EBITDA, but I think this is an asset class hospital operators is an asset class you probably justify this high valuation because of the uniqueness in the aging population and so on. Actually, are the tailwinds that will support the growth. So, but for Parkway Life is owning a hospital, so you probably couldn't get it's only an asset owner. It doesn't operate, so it doesn't maybe do not benefit from any upside or any change in the policies or any increase in the medical costs that the hospital operator will enjoy. So between hospital operator and an asset owner, I would think a hospital operator will give you the growth that that you are looking for growth. You give you the growth, and potentially, like say, some of these hospitals, they could actually spin off their assets into a REIT. So therefore they can retain their operating part of the business. Is still gain a valuation, a boost to the valuation. So therefore, sorry, I'm probably not answering your question, but I think it's in my case, in my opinion, I think it's better to buy an operator than I prefer an operator than an asset owner. And given the demographics in Singapore, the Singapore hospitals operators are likely going to thrive in the current environment, even with the government coming in, setting up more restructured hospitals. I think the demand for healthcare treatment will continue to be underpinned by our aging population. Thanks very much. This is a question on Marco Polo Marine. I'm not sure about RHN. I think Paul will take that one, I guess. When is the next dividend payment for Marco Polo Marine? Marco Polo Marine's year end is September. So we're expecting the results in November. So the dividend will be maybe, because it's the end of the year, so it will go through a AGM to approve the dividend. So you're likely to see it in January, December or early January. Thanks very much. I'll pass on to the rest to take. Thanks.
Yeah, I'll answer some questions. The first one is, please share your latest view on ECWO REIT and the possible scenarios going forward. Thanks. Yeah, so for ECWO REIT, their shares have been suspended since 31st August. So it's more than half a month already, and basically because they defaulted on their offshore loans, the interest payments, they couldn't pay it. So yeah, their shares will probably be suspended for quite a while going forward. But then sort of possible scenarios for them going forward is that if they can complete the divestment of two of their assets currently, they have plans to divest 2 assets to pay off some of the loans. And this divestment as has been extended also the long stop date because the purchasers are having some issues, I believe, with raising funds as well. So yeah, it's not too good for ECWO REIT now. Yeah, shares are suspended. Yeah, so yeah, I don't really see how they can other than the fact that they can complete this divestment and pay off a portion of the loans as well as the interest. Yeah, but the shares are suspended from trading for now. Yeah, sorry, I'm not so familiar with ECWO REIT. So yeah, we don't cover them, and we've never met the management as well. So I think that's the best I can answer. Sorry about that. OE commercial and first REIT sold at high volumes. Please share your comments. Yeah, I don't see any news about these two counters. The only thing that I saw was that first the sponsor of first REITs, OE Healthcare, they pledged some of the shares against some loans and such. But that shouldn't really affect the share price. Also, I don't really know why also, but it could the sell-down could probably be because of the interest rates as well, higher for longer, and we don't think that the interest rates will be coming down anytime soon. So yeah, it could be some headwinds there. Yeah, but I don't see any specific reasons why OE commercial and first REIT and I don't know why also that they sold down past few days, other than the fact that the sponsor of first REIT, they pledged some of the shares. I find in Singapore, which counters will generally benefit? Yeah, so the hospitality sector will benefit for the near term and every year as well. When everyone's coming back, we see that the record room rates, we record room rates and RevPAR during this weekend. Like this past weekend, we also we expect that the RevPAR will be exceptionally high, like all-time highs or close to all-time highs. Yeah, so hospitality REITs will benefit, and those in the hospitality sector mainly will benefit. The retail sector also might benefit as like an indirect beneficiary as more tourists come and they might spend more on the retail sector. But yeah, but hospitality sector tends to benefit the most. Any latest update on Manulife? Yeah, there's no update since the latest results from Manulife. Yeah, no updates at all. Yeah, but that's not it's less than a month since the results, or around a month. So yeah, we give them some time to update us when there are any new events or anything happening. Yeah, there's another comment on Manulife. The sponsor was supposed to conclude the Phipps Tower transaction by end of June, but even now it's not. There's no announcement, no progress. What's going on? Yeah, so that one I saw. We do have any updates on what's going on, and what's with the delay with the divestment of Phipps Tower? Yeah, so we only can wait for updates. So as of now, I don't have any details as well.
I think they have to resolve
Yeah.
the debt first, right?
Yeah, the waiver part, right?
Before they
Yeah.
can do any transaction.
Yeah. So if no, actually, for the waiver part. So first of all, for Manulife, the issue is if they have to seek the waiver before they can pay any distributions, and then if they don't seek the waiver, they also I mean, as of the most recent financial statements, their loans are fully current already. So like they are expected to pay out their loans if they don't seek the waiver as well. So yeah, so yeah, I'm not sure if Paul has anything to add about this, the Phipps Tower transaction. Yeah. Yeah, so the next question is, your price target for Prime is very far away from the current price. Is it achievable over what time frame? And is there any recent developments for it? Yeah, so no new updates as well from the REIT. Just that our time frame for our target price is usually 1 year. And we do note that in the near term, there are a lot of headwinds, especially with Manulife. So all the US office REITs will be affected similarly, as it's hard to see them. Usually they trade kind of in sync because they are closely related in the same industry, and I mean the same US office sector as well. So but the thing is, our target price is still about 0.5 times of book value, while the Prime is trading at like 0.2 times, less than 0.2 times book value. Yeah, and for Prime US REIT trade at these prices, the dividend yield is 30%. So we think it's still a buy for us. But we expect the share price to remain weak, but in the long term is okay because of the fundamentals and the fact that they are so heavily discounted to book. Yeah, I think that's all for me. I have no time to rest of my colleagues. Thanks.
Yep. Okay. Anyway, at least for me, I guess the most interesting thing, if there's anything interesting for Manulife, is that it can rebound even if the office market doesn't rebound. Because the events that need to happen first is they need to resolve the breach in the loan. Because the sponsor might come in. So once they resolve it, the sponsor can come in either to buy the Phipps property, number one, or even give a sponsor loan. So they can't do a lot of things until they resolve the debt. So assuming they do receive the although the breach has been recovered, but they still need to discuss with the banks, because what if it might breach back again? So there's still negotiations on their part. So once that is resolved, I mean, hopefully then you will have this. They can either support Manulife through the FIP sale, number one, number two, through a loan from the sponsor, or even through a EFR, equity fundraising. So everything starts with resolving the debt issue first. And actually, strangely, because of the FIPS transaction, that's why they did this very strange mid-term valuation. As you will notice, most of the US REITs don't do a valuation there, but because of the FIPS, they triggered the valuation. Then the valuation gap down. Then you had this cascading thing. So the side effect of having to do this FIPS actually triggered a even worse scenario. So my own view is that, I mean, even the one thing good again for Manulife is that even if the environment is not strong for office, if this debt can be resolved, because they need to not only just solve breach, they might need to change a bit of the terms, because if they are so tight, the breach could come on and off. Yeah. Then once you resolve the debt, the fourth thing that could happen is they can also pay the dividends. So everything all boils down to them resolving the debt. Okay, let me just try to answer a few. Does PSR have any updates on Del Monte? So for Del Monte, the results are still weak. We still like it longer term, just that in the near term that you expect weakness, because they're still holding almost a 1 billion of inventory. And all this, number two, is a high cost inventory that they accumulated. So what they're trying to do now is they've been raising prices and trying to try to slowly clear off this inventory. And then they have to resolve the debt too. Not resolve, there's no debt issues, but just that they have to generate enough cash flow because the debt levels are still high. So that's why they have both a near-term P&L issue and also a balance sheet issue. But of course, medium term is still good because they have a strong brand name, and they just raise prices to try to unload this, to try and offset the weak margins that they are facing right now. How is LHN performing, and when is the next dividend? So I think LHN just gave, maybe yesterday or the day before, an update of the operations, and of course everything is positive because the rental for their Collivo is doing well and so forth. So the next dividend we think should be when they release their results, maybe middle of November. They haven't announced. Maybe middle of November, then the dividend could be, because they still need to get the final, they need to do the AGM, then approve it. My guess is sometime in December, I think, yeah. But we think there'll be a very good dividends. Ordinary dividends, the yield now is about almost 7%. And because they dispose of LHN Logistics, so you should get another maybe 5 cents, I think, of special dividends, just based on recollection in terms of the estimate that we had. So they will pay a normal dividend of 7% yield, and then there'll be another special dividend on top. Okay, let me try to answer if there's nothing much more. Okay, yep. Okay, I think mine is all LHN. Okay, I think I can move on to whoever has any other questions. Yeah. Then we can move to TA. Let me answer any fundamental aspect to share on MindChamps. So MindChamps is trying to be like the marquee brand in preschool. Although they don't do any briefings, they don't talk to anyone. Just looking at the results, they are starting to recover. The stock is trading actually quite cheap. I think if you strip out the one-off game, they're probably like 7-8 times PE. But really, they did a presentation with us, but we probably learned nothing from it. Just keep talking about how good their brand is and why is it important to have good child education, which we all of us obviously know. So I don't really have a strong view on MindChamps because they don't really reach out much to investors. Okay, anyone wants to move on to TA then, since got so many TA questions. Yeah. Zain?
Okay, thanks, Paul. I'll move on to the TA. Okay, first I will just start in the chronological order. So first one is Lei Chun. So for Lei Chun, it looks like some possible pullback. Price actually just trading in a rising wedge and then it broke down on Friday. So for now we are retesting back the 0.050 this support level over here. So let's see whether it pulls. If it pulls, then could potentially just trade a bit of a range. If it doesn't, then potentially we could see some further pullback. Yeah. Okay, the next one is APEC Realty. Okay, APEC Realty, I think it's just there's some it's still trading some downwards momentum over here, lower highs, lower lows, and also broke below the recent support at around the 56 cent mark. Currently, it's just consolidating in a bit of a range, finding support from the previous resistance level around 53 cents over here. Yeah, so for now, maybe just see a bit of a range consolidation still. Okay, then for Hiap Dong, I think currently price still looks like a bit of a range, still finding support around the 12.3 this level over here. Resistance is still there around the close to the 13 cent mark. So yeah, potentially could still find a bit of a range trade still. Unless there's a breakout in either direction. And then for Far East Hospitality Trust, think still nothing much. Yeah, still finding resistance around the 64.5 cents level over here. Yeah. Then I expect support to be still around 61 cents. So potentially still a continuation of the range we've been seeing over here. Next one is Service Now. Okay, so Service Now, after a break from this uptrend channel, price has just been trading sideways. Recently close to the swing high over here, then a bit retracement. So for now, I think the sideways section could continue. Could be seeing some support from potential retest of this resistance breakout level around the 570s zone over here. So yeah, could just see a bit of range trade still for Service Now. And moving on to the Hong Kong counters, the first one, HSI Management Tech Index ETF. Yeah, price has just been sideways for now. Yeah, in terms of trend wise, it's still downwards over here. So potentially we need to see if the support level over here can hold around the 3.97 around there. If it doesn't, then potentially could just retest the low around here, 3.88. Then for Tencent, price still trading sideways over here. Retest of the support around 315 today again. So see whether it can hold. If it doesn't, then likely we're going to search the next support level, which is closer to about 307 over here. If it does support, then likely we just continue with a bit of a range, just rebound again. Then for JD just sideways for now, still retest of the lows at 122, 123 over here. Yeah. Then but the momentum is still quite weak. So if it doesn't hold, then likely we go on to see maybe lower lows being formed. Potentially a retest of this trend line over here. That could bring us down to maybe like closer to the 100 over there if there's still continuation of the downside momentum. But over now, looks like just a bit of a range over here. And then for Ping An Insurance, still some resistance at 48 to about $49. Previous strong support turn into resistance over here. Then I think price action wise, a lot of sideways action currently still. So yeah, this is one support level is around 46 over here, and followed by around 44 as the next support level. Okay, the next one, Alibaba. Yeah, Alibaba still breakdown of the channel over here last week. Then currently just sideways around the swing low around here, $85. So if this level hold, then probably just continue to see some sideways action between 85 to about 87 to 88. If it doesn't, then likely going to search the next support level at around 81 over here. Okay, then on the three local banks, start with OCBC. Okay, so OCBC, I think some strength is that the last week it broke out of this consolidation triangle over here. Then price, I think just around just hovering around here this week. So there's some resistance at around close to 12.90, about 12.90 to about $13 over here for now. But if the price continues its bullish momentum in the longer term, and I think could potentially retest above $13, which is this uptrend channel resistance. Yeah, that could bring us to maybe $13.10 over here. Next one I talk about UOB. Okay, UOB currently also there was a breakout of this consolidation triangle over here last week. Then price retested the recent swing highs over here close to about $29.30 to about 40 cents. Currently pulling it back a little. The trend wise is still good. Yeah, just could just do a little bit of a sideways movement. First, then whether it can see whether it can make a higher high and higher low in this stretch. Yeah, next resistance level will be the highs at around $29.70. As for DBS, also similar thing, breakout of this consolidation wedge. And also currently just retracing a little, but could be just back testing the previous resistance level breakout around $34. Yeah, the trend wise is still looking good. Could potentially retest this uptrend channel resistance again if it does continue its momentum. That could bring us maybe to about $35.50 around there. Okay, then EA for Singtel. Okay, for Singtel, I think really looks like price has overcome this key level around 237, following like a double bottom over here, and then momentum is also upwards. So yeah, currently price hit about 243. Currently the support level will be around 239, 240 over here. Yeah, then resistance could come in about the next strong resistance could come in closer to about 247, 248, this level, which was like a resistance and support resistance over here. So this is a key level to watch out for. Okay, then for Capital Corp. Yeah, Capital Corp, I think nothing too much for now, just sideways trading still. Yeah, so support will be just closer to about 670 to about 680. Then resistance could come in around $7, almost about 710 over here. So yeah, we're just kept in this range still. Okay, then for Sembcorp Industries, I think currently price is finding support at near the $5 mark over here, which is this swing lows over here. So potentially could just do a little bit of rebound sideways trading. to try and retest the support that was broken around 520s, about 530 over here. And then potentially could meet a downtrend channel resistance trend line over here soon. Okay, then for iFast, I think currently price try to break above this horizontal resistance around 580s over here. But looks like there's some negative divergence on both MACD RSI. So yeah, some weakness in terms of momentum upwards, even though then could potentially if it doesn't price doesn't get above like 585 this level over here again, then potentially it could just retrace back down to test the support around 560s over here again. And next one, Food Empire. Okay, Food Empire, sideways for now, but let's see whether you can take out this 107 or 08 level over here, this short-term resistance. We try and break out this range over here and this wedge pattern over here. Since recently there's a formation of this higher low support at 103. So potentially there is a chance for a short-term reversal upwards if it breaks above this short-term break above the recent swing high resistance at 107 or 108, and if it becomes a support. Okay, then the next one will be Keppel Pacific Oak. So for this thing, it's still just sideways trade in the range first. MACD some positive crossover recently, so that could mean maybe we just form a bit of range to try and retest the resistance around 24 cents over here for now. Okay, then for Prime. Okay, Prime recently we had a retest of the support that was broken around 14 cents. Then price just still sideways for now. So maybe that could continue for now first. Okay, then for Fraser Center Point. Okay, I think it has been in a very long range formation since this uptrend over here, then it transformed into a range over here. So for now, I think we still expect some resistance at 226, about close to about 230 over here. There's quite a strong resistance still at this zone. Yeah, so I think the range should likely still continue for now. Okay, next up will be STI. Yeah, so STI, I think recent price action wise, looks like this downward stretch is ended. Then we formed a higher low over here, and price end of last week we broke out over this swing high. So currently STI looks like short-term rebound, but some resistance could be around this 3285 level over here. Yeah, 3280. So this was our prior support resistance level breakout over here. So as this was like we are near this support level that was being broken. So yeah, this is a key level to watch out for. Then next resistance will be closer to 3320 over here. These swing highs as well as this swing high as well. And so for now, could expect some short-term resistance at this 3280 level zone over here. Then let's see if it do some pullback to retest this 3240, then whether see a higher low being formed, then we can continue the upwards bounce. Next up, UMS. Okay, UMS, I think looks like a bit of a consolidation from this upwards trend over here. Higher lows, but the highs is being kept around 128. So need to see a breakout of that to see continuation of the bullish momentum. But do note like there's quite a strong resistance at around quite close. It's around 130 over here. We have resisted about 2 times in the past here. Okay, then for Franken looks like there's a breakout of this trend line resistance over here, which has acted as a resistance past few times. So recently there's a breakout there. Then we made resistance at this swing high 114. Currently could be doing a potential retest. So it'll be interesting to see whether this zone what about 105 to 107, this back test whether we'll be able to hold as a support. Then if it does, then maybe you could see some rebound again. Okay, then for AEM, I think currently price pulling back from these 350s level still. There's this key level which was prior support over here. Then could be retesting this. Retested this about 335. This level we broke out from. So price is just, I think could be just, if it's some support over here, price could just be kept in a bit of a sideways direction still. Okay, then for Capital REIT, I think Capital REIT maybe some after start trading outside of this uptrend channel, looks like a bit of a range for now. Support is around 86 cents. I expect resistance to be coming in about 89 cents over to about 90 and a half cents. So yeah, could expect a bit of a range trading for this company. And Delphi, next one. Okay, Delphi, yeah, still in this range over here. So nothing too much, except that just note that some lower highs being formed over here upon the test of the support. So that is some weakness. Yeah. Okay, then next one is Meituan. Okay, Meituan still bit of a range last week. Most of the Hong Kong counters were just keeping the range. So yeah, but the trend wise is still still bearish over here. Breakdown of this uptrend channel support. So so near term support will likely be this swing low over here, close to about 118, 120 over here. Okay, next one, Manulife US REIT. So Manulife recently just formed a new lower breakdown of this 0.055 level. In terms of next support wise could be based on this trend line over here, then could be at around 0.044, 0.045 maybe. Yeah, but yes, the trend wise is still very bearish. Fresh new low being formed last week. Okay, then next one will be CLAS as well as CLAR. So for Escort, Escort, I think currently maybe just a bit of a sideways movement. Price finding some resistance upon the retest of this $1 previous support level, but just keeping a bit of a range for now around with support at 97.5 cents. So yeah, maybe that will continue with the support holds for now. Then for Ascendus, Okay, for ascenders, the trend wise over here is still uptrend. But we are at a key resistance level, which is around the 285 level over here. Has been resistance a few times over here. So yeah, expect it to be still resistance unless we see a successful breakout above this level. Then maybe we could see maybe like 290 upon a test of this channel resistance. And some Hong Kong counters again, Beijing Capital International Airport. Okay, so price didn't manage to hold at this trend line around close to $4, 390 over here. So potentially next support based on this downtrend channel could be around 360 over here. Okay, then 618 JD Logistics. Okay, yeah, it's still quite bearish over here. Yeah, price looks like it's just forming a bit of a range over here, following the breakdown of this level around $11. Yeah. So maybe that will continue if it does decide to consolidate between about $10 to $11 over here. Okay, Capital DC, any upside in the future? Capital DC, I would think maybe leaning more towards a bit of a consolidation. Yeah, price rebounded from here, then it held in a bit of a range. There's still some strength since that overcome of this resistance about 215, 216, this level over here has turned into a support. So as long as that's still holding, it's still positive for KDC. Yeah, then but I will expect some near-term resistance here about 223 to about 225, these swing highs recently. Yeah, so we might be still kept in a bit of a range. Okay, then for Genting Sing, we are another test of the downtrend channel support over here last week. Then looks like still finding support again. Yeah, so price is hugging the downtrend channel support, which is currently around 86.5 to about 87 cents. But the trend wise is still quite weak. Over here, this stretch, we are still seeing lower highs being formed. It's on Samudra Shipping. Okay, Samudra Shipping, I think still resistance from this 76 cents level over here, which is also like this trend line over here, previous support. So it hasn't been able to climb back in. Yeah, previous time it tried, then there was some selling taking place. So I think price just still a bit like consolidation over here. So yeah, support will be up to 73 cents over here, then resistance likely to still be from this level. So I expect a bit of a range still. Okay, then next one I'll talk about sets. Okay, for sets wise, yeah, I think still nothing too much. Although price started to flatten out, then could be like a double bottom formation over here. Need to see whether how you test of this resistance over here again, 263, about 265. Then let's say, let's see whether you can potentially form a double bottom and try to trade upwards if there's a breakout of this resistance level. But for now, just kept in a bit of a range over here. Okay, then Ctrium, next one. Okay, Ctrium, I think for now it's just sideways for now, but it looks like there's some it's losing some strength, possibly trading out of this main uptrend channel support, then just finding support from the previous range resistance turn support level for now. But in terms of the MACD wise and RSI, recently the double top you see lower high being formed, so so a bit lack of a momentum here still. So maybe just continue to trade sideways unless there's a break downwards. Then we might retest the swing low around 0.133 over here. Okay, then next one, Mapletree Industrial Trust. Okay, so for this, I think it's still very much in the range after getting above this resistance level, turn into support 227, but near term wise, there's slightly resistance at 233, 234. And so I would expect some range to form again at this zone over here. And next one, ST Engineering. Okay, ST Engineering, I think it's still trending pretty well. Traded above this rising wedge, also a breakout of this resistance 389, 390 over here. Next swing high could potentially, if it manage to clear this resistance over here, 390, then could potentially test the previous swing high around $4 over here. Okay, then next one, Digital Core REIT. Okay, for this, I think still the uptrend, the main uptrend is still intact. Recently just retest of this previous resistance 56 cents. So if it's able to hold, then could see some range trading currently with resistance at around 59 cents. Yeah, I'll just take some questions from the chat. Bhumi Tama. I think nothing too much. Still strong resistance at the 59-cent mark. Then price is just trading in a bit of a range still at these levels, with the support around 54 to 54.5 cents over here. GHY culture. Okay. This counter is rather illiquid. Could be another retest of this prior support turn resistance around the 39.5 cents, 40 cents level. Seems a very strong range support previously. So I expect some resistance back again at these levels. And for venture, venture rebounded little from this downtrend channel support 1270. Then currently I expect some range trade first. There's some resistance from this 1320 level currently. So we might just see price just sideways first. If it clears, then the next resistance level will be like 1360 over here. Okay, then I'll answer the last two on Zoom and Tesla. So for Zoom, testing this downtrend resistance line over here again. So let's see whether it's able to break out firmly and stand above. Then there's a chance for some upwards movement. But still some resistance at $75 over here. This level as well. Okay, then next one for Tesla. Tesla is at this key downtrend resistance line again. But yeah, price, in terms of price yet, there's still no divergence yet to show like it's a very clear sell signal, like the last time over here. Currently, price is the MACD RSI is still trending positively upwards. So if it does continue to trade in this like uptrend channel over here, potentially price could still reach higher, maybe to close out this gap over here between 280 to about 290. Yeah, then there could be the next resistance for Tesla. Okay, so I think that's all from me for the TA part today. I hand over my time to my colleagues if they are answering some of the other questions in the chat. Thanks.
Thanks, Zane. Okay, this is a question addressed to me. Hi, Peggy. What's your take on Tiong Moon? Earnings have surged and is trading at less than 0.5 times book. Do you see any risk going forward? I haven't studied Tiong Moon's for at least six months, so I'm not. Whatever I say will not be very intelligent. So I'm afraid I can't comment on Tiong Moon. I will do some work on it and maybe I can follow up later in subsequent week if that's okay for you. Thanks. The next one, HMI's hospital in Malacca is already qualified for MediSave for a decade, but the take-up rate is not high. That's what I understand. Oh, thanks for the comment. I knew that too, but yeah, but I'm not sure whether this is this qualification to use MediSave has to be regularly applied and updated. So the information on this in this space I'm still very lacking. Far more when we pursue to elaborate further on the healthcare sector. Thanks for that. Okay. I think this is that probably all for us, right?
Yeah, I'll answer the remaining questions, I think. Yeah, thanks, Bai. Yeah, so have REITs bottom? Yeah, so for this, of course we do not know when REITs bottom, but if I knew I wouldn't be working already. But the thing is, our view is that for REITs, because of the higher interest rates and probably for longer, and as the REITs refinance their existing loans, they'll be hit by higher interest expense. So we do not see much capital appreciation upside for REITs, but yeah, we are more on the dividend play now. So if we can pick up some REITs that are offering good dividend yield, solid fundamentals, operational wise, they can perform well. Yeah, we think that's a good investment proposition for now. But when exactly REITs bottom, yeah, it's hard to say. But our view is that yeah, the share price in our view is kind of flattish for now, because it's hard to get any DPU growth as well. Yeah, so that's our view. Do you prefer CICT or NPAC in the short, mid to long term? Yeah, so for CICT and NPAC, in the short and mid term, I prefer CICT because their assets are mostly in Singapore. NPAC, there are some their exposure is Maple Tree Pan Asia, so they have exposure like Festival Walk in Hong Kong, and they also have some exposure in China, which is not doing too good. The overseas assets. But for Singapore, because of limited supply, we are seeing some of the assets that they are doing quite good, and valuations are also holding up very well for Singapore assets. Yeah, so in the short to mid term, I prefer CICT, but perhaps in the longer term, when China and Hong Kong side recovers, MPAC could outperform. Yeah, say recover. Yeah, so right now, I believe Hong Kong, China, their rental reversions are still negative. Mas and EC World REIT gone, baby gone. Even if they can sell away their properties, it will likely be a huge discount. So what is there for unit holders to look forward to? Yeah, that's true. Even if they sell, like they distress sell, we call it, if it's probably a discount. But the difference between those two shares now, EC World REIT is has been suspended already, but Manulife, other than the fact that they need to seek waiver from the loans, and they halted a dividend distribution payment, Manulife is still trading, unlike EC World, which is already suspended. So if in the unfortunate situation you're holding EC World REIT, you're kind of stuck with the shares. And yeah, you don't have much option there, but at least Manulife, there's still some, the shares are still trading. Yeah, but for Manulife, what to look forward to basically, like you mentioned earlier, is the fact that they can seek the waiver from the banks, because they breach the covenants. So even if they bring down their level to below 60%, which is the unencumbered ratio, the loan covenants, the ratio. So even if they can bring it down, they still need to seek the waiver, because once you breach the 60%, doesn't matter if you bring it down to 50% or not. Yeah, it's still considered a breach and you need to seek the waiver. So they are still in discussions, and they are seeking the waiver for now. So hopefully they will be able to do so. Yeah, but for EC World REIT, yeah, they're kind of stuck. And yeah, hopefully they can raise some funds and to pay off their loans, because they already defaulted on their loans. Their offshore facilities. Yeah, I think that's all for me. Not sure if anyone will answer the Ping Alibaba.
Anyway, for EC World, firstly, the problem was, of course, they actually did get some refinancing of the facilities, but the problem now is the sponsor has held back paying them the rent. It's almost 100 over million. So that's the big issue now. But in terms of like, is it totally a lost cost? I mean, one ballpark way you can compute it is that EC World has about 1.4 billion of assets. So if you assume a distressed sale, I mean, nobody really knows, but if you just do a 30% haircut to that, so they will lose probably about 400 million. Their book is about 600 million. So that there could be still some book value left. It's not. I'm not saying there's a lot left. So their share price, their market cap now is about 200 plus million. So that's one way to kind of gauge, is it totally gone? But again, this is purely conjecture. This is purely just ballpark numbers. But just to give you some rough sense, that they probably, if they do a for sale 400 million haircut, they got 600 million equity. There's still some leftover, maybe 100 plus, compared to their market cap of 200. Just to give some sense of the numbers. Okay, I think with that, I'd like to thank everyone for your time, and hope to see you next week. And feel free to join our community if you got any other questions. So thank you, everybody, and have a good week ahead. Thanks, everyone.